Hello, welcome to Business Morning right here on Channels Television. It's another trading day, and definitely yesterday wasn't bad to start the week. That's talking about the domestic market here. Welcome. Let's see how this week or this day is actually going to pan out now. Let's get the stories we should be looking at right now. We see the Nigeria Data Protection Commission. They've given banks, insurers, and pension operators and gaming firms 21 days to show compliance with the Data Protection Act 2023 or face sanctions. The NDPC directed affected organizations to submit 2024 audit returns, appoint data protection officers, outline security measures, and register as major data controllers or processors. The Commission warned that non-compliance could attract fines, enforcement orders, or prosecution. And we see the federal government has approved a new debt strategy allowing Nigeria's debt to GDP ratio to rise to 60% by 2027 from 52.25% in 2024. The plan, developed by the Debt Management Office in collaboration with the World Bank and IMF, seeks to manage borrowing risk while sustaining growth. Targets include capping interest payments at 4.5% of GDP, keeping sovereign guarantees below 5%, and adjusting the debt mix to 55% domestic and 45% external. And to other matters now, the Federal Competition and Consumer Protection Commission, that's the FCCPC, they've issued a strong warning to Nigerians over the consumption of fruits forcefully ripened with harmful chemicals, particularly calcium carbide. The warning was delivered today during a one-day sensitization program on food quality standards organized by the agency in Ado-Ekiti. The executive chairman of the FCCPC, Mr. Olatunji Bello, represented by the director of quality assurance, Mrs. Nkechimba, she condemned the growing sale of adulterated and contaminated foods in markets, describing it as a major risk to public health. All right, let's get a check on our major forex earner now. That's oil prices. We're seeing the down at start today after surging nearly 2% in the previous session. We see Brent crude there, 0.57% down this morning, $68.41 a barrel. But this is progress, you know, $68, but it's still the range trade at this point. Not yet at $70 per barrel. WTI crude, that's still $64.39 a barrel. Did hit that $64 level. That was yesterday, 0.63%. But we're seeing a pullback this morning. All right, let's get to the commodities market now. Last Friday at the annual Jackson Hole Symposium, Federal Reserve Chair Jerome Powell struck a distinctively more dovish tone, flagging the possibility of U.S. interest rate cuts as soon as September. He explained that while inflation pressures, especially from tariffs, remain, the risk to jobs from a weakening labor market has become more pronounced, prompting the Fed to proceed carefully. Well, joining us now, we have Dr. Ifeoma Nwokolo. She's Assistant Vice President, Financial Derivatives Company, that's for Research, Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Laddie. Thank you for having me.
Fantastic. So, you know, definitely, we know investors, they like to see, you know, dovish signals, you know, coming out from central bankers at this point when it comes to, you know, interest rates. So, you know, what's this signaling? You know, from what we've seen from Jerome Powell, he did confirm that we would see, you know, rate cuts, you know, by September. But, you know, bringing it down here, how would the CBN's Monetary Policy Committee respond, you know, at its next meeting? You know, seeing that, you know, there's dovish sentiment expected in the U.S.
Okay, yes. The last week enthusiasm suddenly faded this week, even though Fed Chair gave his word during the Jackson Hole Symposium that monetary policy window, that the window is now open for a cut in rates. But we are seeing that the market sentiment has changed because the focus is now basically on corporate earnings and data points. And the data point is expected to be out September 11, and this will determine whether Fed is actually going to cut rates. And we saw what this brought about, the enthusiasm for last week. It brought about a hike in the price of Brent. We saw Brent yesterday night trading at about $69 per barrel. And this morning, because of the anti-seizing has faded, you see prices of Brent coming down. So if the data point is favorable, because what Fed is actually looking at is the labor market and also inflation rates. If this is positive, I think Fed may likely cut rates. And if they do, I know that a weaker dollar, because once there's a rate cut, it amounts to a weaker dollar. The weaker dollar is a strengthened naira. You're going to see FPI influx, and we're going to see that the price of PMS also is going to increase, because we know that PMS is traded in dollar, and once dollar weakens, countries have more dollar to purchase. So the supply the demand will increase, and this will bring about an increase in the price of Brent. And this is a plus for us, more revenue for us. And FPI will definitely flow to emerging countries like Nigeria, where interest rate is high. It's going to be a plus for us. But that Fed is trying to cut rates, is anticipating to cut rate, or eventually cut rate at the end of the day, does not mean that CBN is going to mirror the rate cuts, because we have our own domestic things that we look at. We have the inflation, which is the major focus of CBN, inflation control and exchange rate stability. So all these things will first of all be considered. So we are not going to follow suit because they are cutting rates. We are also going to cut our own rates. We have our domestic imperatives. So if we can, in last month or the last meeting, the market anticipated a rate cut, but we didn't see it because the core inflation was high. So these are the factors that the MPC will look at: inflation rate, not just headline inflation, food inflation, core inflation, exchange rate, money supply. And in recent time, we have seen that exchange rate has been stable to an extent, and we have seen that also the money supply has continued to decline up to 15%. Money supply growth declined to 15.8% in July. So these are the factors they are going to be looking at. They are not going to just immediately mirror Fed because they cut rate, and we are trying to cut rate. We are going to be considering our domestic imperative.
Right. So I guess in essence, what you're saying is the CBN will not do follow, just because the U.S. Fed is going to cut. That doesn't mean we're going to cut. We'll focus on our own issues at this point. But let's pivot to another issue now, and that's in the domestic food market. The Federal Competition and Consumer Protection Commission, that's FCCPC, they've issued a strong warning to Nigerians over the consumption of fruits forcefully ripened, with harmful chemicals, especially calcium, carbide. And definitely it seems why the producers would actually do this. I guess they're trying to get the fruits out fast and make more profit, but we're at risk here, with what's going on. How are you seeing that?
Yeah, I saw the warning yesterday, and I think it's a wake-up call to everybody to participate in this, because we see some of these people do this using carbide to ripen fruits so that they can sell. So you see a fruit that is supposed to ripen in 4-5 days' time is ripening in 2 days or even 1 day. So this is causing health hazard, because this carbide is made of toxins that are harmful to human body. So there's need for a sensitization program on food quality structure in Nigeria. It's very, very important. There's food quality standard is important. So people should know, or traders should know, that they are jeopardizing the health of Nigerians by doing all of this. And if you come to think of it, since I heard of this, it's not a news. Yes, it's been happening, but I think the FCCPC are just bringing it to light so that the public can know. And I think for me, I've tried to minimize my intake of fruit that need to be ripened. You see fruits like banana, fruits like oranges, and all these fruits. So there's high risk, and people will be asking, how do I know fruit that is ripened with carbide? Of course, you are going to know. The taste is different from the normal taste. If you eat a banana that is ripened with carbide, you know it's not going to taste like banana. It's just had a weird taste. So it is important. This wake-up call is important, and it's important not just sensitizing people. There should be monitoring teams that will be out there to monitor what these people are doing. And aside monitoring, there's need for us to work with our consciences. I think that these traders need to. It's not about money, but you are risking and health of people.
Yeah, so it's definitely, not about money at this time. And I wish there was a way I could, identify fruits that have been ripened by carbide before tasting it. That would save me money at this point. But, I guess we all have to find a way to work together. But what's happening with, prices generally in the commodities market?
Prices of commodities?
Yeah, domestic commodities. What are we seeing with prices there? Are they coming down, hopefully?
Yeah, we are in the heat of harvest season, and we have seen that we have August break, and once there's August break, farmers harvest. So we have prices of commodity on like 2%, 3% decline. We have commodities like garri decline by over 14%. We see commodities like rice is stable, beans has declined. Quite a number of commodities are declining, and palm oil too has declined by 4%, and we have seen that pepper also declined by over 7%. So we are in the heat of harvest season, and prices are declining. You can see the slides. Prices are declining significantly, and this will continue, even though the harvest season may not be long. But for now, we may see the food prices declining compared to last month, because last month was just beginning of harvest season. That was why we saw that food inflation increased, and month-on-month inflation also increased, which could be a driver of food inflation. But this month, we are likely going to see food inflation taper, and it will also filter into month-on-month inflation, which is the real. Yeah.
Yeah, so definitely. That's music to my ears at this point. Food prices are going down. Watch me run to the markets after the show. Thank you so much, Dr. Ifeoma Nwokolo, Assistant VP, Economic Research, Financial Derivatives Company. Thank you for coming on today.
Thank you, Ladi, for having me.
All right, so the Kiara Jollof Fest, organized by Kiara Rice Mills, brought together 8 finalists from across Nigeria in a keenly contested cook-off. The competition ended with Team Akure clinching the top spot and winning a cash prize of 2 million naira. Take a listen.
It's a battle of flavors at the grand finale of the Kiara Jollof Fest by Kiara Rice Mills. The finalists, 8 champions from Lagos, Warri, Onitsha, Benin, Akure, Oyeli, Port Harcourt and Owerri, have come together for the ultimate jollof cook-off. Before the heat begins, chef coaches give final pep talks, then it's a 10-minute dash for the ingredients. Each contestant must grab everything they need to bring their masterpiece to life. The clock is set for 1 hour 30 minutes. Judges watch closely while flavors and aromas fill the air. The cooks season and stir. The audience enjoy plates of jollof while winning games and prizes. One by one, the contestants present their dishes, explaining what makes their jollof special. The judges score based on taste and flavor, texture, presentation, plating, creativity, originality, and overall impression. At the end, 3 stand out: Benin, Akure, and Onitsha. And finally, the winner. The champion claims a 2 million naira cash prize and bragging rights as Kiara Jollof Fest winner. After the competition, a press conference follows where the winner, judges and organizers share their thoughts on the festival.
I do think it's very important that we preserve our culture. One of the best ways we can do that is through food. And I'm really excited that the Kiara Kiara Rice Mills did this. It's one of the most spectacular events I've been to, especially in terms of food competition. While we were tasting the food, we're looking for the taste and flavor, which is obviously the most important thing when you're tasting or checking out food. We're also looking for creativity, how well people prepare the meals, what extra spice did they add to that meal, and we're looking out for presentation, and we did find that amongst the contestants this evening.
I feel really excited. I can't quantify how I feel. I feel deeply grateful to God, and I'm grateful for Kiara, because if they didn't organize this, I'll probably just be cooking my daily meals in Akure and hoping for a big break someday. So I'm really grateful for Kiara.
This Kiara Rice Jollof Fest, which have turned out to be exceptionally good, which have strengthened our beliefs in the Nigerian culture, and having credibility of this event is what keeps us going forward. And hosting this event have turned out to be a more prouder feeling and a feeling of joy, as we see in everyone's eyes over here. This in itself is a milestone.
The Kiara Jollof Fest wraps up on a high, with the organizers reminding everyone that the Kiara Rice brand brings quality, taste and nutrition for a delightful culinary experience.
All right, so our first conversation now. Nigerian St. Kitts, in partnership with Aquarian Consult Limited, a business development company there. We see that they're partnering at this point. We've seen a structure, this one by Aquarian Consult, trying to build a transatlantic collaboration between Africa and the Caribbean. The inaugural edition that held in Abuja, that was in March 2025, has already begun to bear fruit at this time. One of the standout outcomes is a groundbreaking agricultural partnership with St. Kitts and Nevis. Let's learn more about what this means and what this partnership would mean for agriculture in both countries. Joining us for this conversation, we have Senator Abubakar Kiara, he's an Honorable Minister of Agriculture and Food Security. We also have Honorable Samal Doggins. He's the Minister, Agriculture, Fisheries and Marine Resources et al. At St. Kitts and Nevis. And we have Aisha Maina, Managing Director, Aquarian Consult Limited. It's great to have you all on the show today. Good morning. All right, let's start with Ms. Aisha Maina. Now, so, this partnership, I believe, is an initiative through Aquarian Consult, Afro-Caribbean Investment Summit, 2025. Talk to me about, this partnership, and if you see, opportunities to expand this collaboration between, beyond Nigeria and St. Kitts and Nevis to, encompass broader African Caribbean agricultural partnerships. How are you seeing that?
Good morning, and thank you for having me on. I mean, your question wasn't too clear because it was breaking up a little bit, but I think I get the gist of what you're trying to ask. So yes, in March this year, we had the Aquarian Consult Afro-Caribbean Investment Summit, and it brought Africa and the Caribbean together. The Prime Minister of St. Kitts, and it brought Africa and the Caribbean together. The Prime Minister of St. Kitts and Nevis graced us with his presence with a fantastic delegation, which included the Minister for Agric and Fisheries and Marine Resources. And a lot has happened since then because the country of focus was St. Kitts and Nevis. So we've done a lot with St. Kitts and Nevis in pushing the Afro-Caribbean Transatlantic Bridge. In 2026, we are going to have another summit. However, we are also curating in partnership with the Federal Ministry of Agriculture and Food Security and the Ministry of Agriculture, Fisheries and Marine Resources in Nevis, and Caribbean, the first Agriculture and Food Security Summit. It's the private sector in agribusiness from the Caribbean and Africa, ministers of agriculture from the Caribbean and Africa together to talk about the challenges that we'll face just to bring the two regions together, talk about the possible solutions and begin the conversations to connecting Africa and the Caribbean. I have to say that I have the ministers of Agric to fully thank for their cooperation and their investment and dedication to seeing that this transatlantic bridge is formed, and we're looking forward to ensuring that private sector and public sector come together to build a bridge, because one cannot do it without the other.
For that, but let me take this to the Honorable Minister, Senator Abubakar Kiara. Now, definitely we know food is serious business in Nigeria right now. We definitely have our struggles here. But, Honorable Minister, break it down for me, what brings, Nigeria and St. Kitts, and Nevis, together in this collaboration in your view?
Well, let me first welcome my colleague from St. Kitts and Nevis, Honorable Dugan, who has been here before and also hosted some of our team in June in St. Kitts and Nevis for the Investment Forum. This is the third time we're meeting with him, and by and large, this partnership is about not only production, but also about processing, adding value to agricultural commodities and taking it to the marketplace and by extension export. And we as government, we have decided to come together, to partner and give an environment, an opportunity for the private sector to thrive, to have this collaboration, trade between Africa and the Caribbean. This predates even diplomacy, our relationship between, of course, the Caribbean islands and Africa, through, of course, we all know the unfortunate incident of the forced migration, which is slavery. But by and large, we've kind of have almost similar culture, similar traditions, similar diets, and I think this is an opportunity for St. Nevis to explore what we have here, because it's a small country. It's I think it's the smallest in terms of both population and size in the Western Hemisphere, and in as much as their domestic population is low, but their tourist population is really huge. At any given time, you have a huge tourist population that they, at the end of the day, have to import food. And we look at a situation where we're just across the Atlantic, and the potentials in agriculture in Nigeria is huge for them to take advantage of. And this is an opportunity for the private sector to thrive. So we, the public sector, the government, President Bola Ahmed Tinubu has mandated us to open up Nigeria in all sectors to collaborate and open up businesses. And we are opening up. We have done for other countries, and this is a brotherly country, a sister country, that we believe that we can have a robust partnership.
Thank you for that, Honorable Minister. But let me take you to Honorable Samuel Doggins now. He's the Minister of Agriculture, Fisheries and Marine Resources, and Kitts and Nevis. Thank you so much for visiting us today. But I'd like you to, give me a brief, overview. What's the food situation like, in your country? And why would you say agriculture is such an important area for cooperation between, Nigeria and, your country?
Well, thank you for having me, and a pleasant day to all. In St. Kitts and Nevis, we are, as indicated earlier, one of the smallest countries in the Western Hemisphere. However, we predominantly survive on tourism, and at any given time, we would have an influx of tourists, and we see about 1 million tourists. So when you look at our food capacity and intake, it is, for our scale, quite extensive in terms of our demand. But all of that, about 80%, comes to the U.S. And where that food originates from, sometimes we have no clear idea. The idea here now is to connect to Africa, connect with Nigeria, where we know where that food is being cultivated. We know the mechanisms behind the cultivation, and it is shared ideologies that produces that food. So when we consume food, we know the nutritional value. When we consume that food, we understand the energies that went behind putting it into the earth and collecting it and extracting it from the earth. And we also can, you know, be happy with the quality of that food. So this connection is more than just, as we say, feeding ourselves. It's really connecting shared history and a shared destiny, because we have been one people from the beginning of time. We were at one time forcibly removed from the continent, but now we're reconnecting that lifeline, reconnecting that blood. And I believe that this presents an opportunity for a valuable move forward to see Africa and its diaspora come back together and reunite in a powerful way. And there's no better way to do that than through something as fundamental as food, because we cannot survive without food. And as we trade and as we come together, at the foundation of it all is to be able to feed each other and feed ourselves in the process.
All right, so Honorable Doggins, you know, in the short term, what do you see, you know, as the benefits, you know, from this partnership, you know, for your country in the short term?
So in the short term, the first part is to be able to enhance trade between both regions. You know, Africa offers scale, knowledge. St. Kitts and Nevis definitely offers innovation and a gateway to the Western world, to the Caribbean region and the wider West. And we believe that in the short term, by this trade and this exchange of food commodities, we can see the development of both economies. You have a wide business sector here in Nigeria that is doing quite a bit of substantial work in agro-processing. In St. Kitts and Nevis, we are surrounded by a number of territories as well. And we believe that our ability to innovate, match with your scale and your knowledge, can see huge benefits for both territories across the Atlantic.
All right, thank you so much for that. Let me take it now to Madam Aisha Maina. She's the Managing Director, Quarian Consult Limited. So, you know, looking at this partnership, you know, more broadly, how do you see it impacting trade, you know, between Africa and the Caribbean region? You know, generally, we know right now, you know, since the President Trump presidency, it's been about tariffs at this point. We weren't talking about tariffs, you know, before now, but everyone's, you know, scampering, trying to find, you know, that good deal at this point. So how are you seeing that?
So when you are in a small market, you generally produce for the small market that you're in. The idea of this partnership between governments is a couple of things. One, government can create policies that open up the pathways for private sector to do business together. That's number one. Number two, the more we talk about trade, excuse me, between the regions, the larger we see the market, and it means that we would have motivation to produce more because it's a larger market that we can supply to. Secondly, or thirdly, the regions need to connect because, just to your point, right, we depend a lot on the global north. And while I am all for collaboration and cooperation with the global north, I feel that there's too much of a dependency on the global north. So much so that it's to the detriment of us, even locally. For example, you heard about the ginger, you know, cost of ginger, and, you know, they said that is because a lot of people were exporting. So we depend so much on the global north to the detriment of even us locally, because all we want is to do business with the global north. Whereas when the regions come together, it becomes an interdependency, not a sole dependency. So it's not like one is doing the other favor. It's that we are growing together. Also, a lot of times people look at the Caribbean and say, well, their population is just very little. It's not even up to a state in Nigeria. But it's more than number of people on an island. It's about strategic placements. So today, if you look at, you know, global geopolitics, you see the, like you rightly said, the tariffs that President Trump is putting on different countries. If we come together, when we come together, a few things would happen. One is we may not even need to export to the United States because the market that we will have across the regions will be dependent on itself and be big enough. And when we do export to the global north, we will be coming to the table with something to offer, not just asking for something to be given to us. On the other hand, because the Caribbean is strategically placed, we can trade with not just North America, but with South America as well, and go from South America or North America to Africa and vice versa. So this connection is trade, it's investment, but more than that, it is the reconnection of global Africa. Because if we don't connect as global Africa, we'll continue to depend solely on the global north. And as you can see, we're not really getting to where we need to get to because we're solely dependent. And I'm really excited about this partnership because it's the conversation that starts the action. And the implementation of it I have a lot of hope, and I trust that it will be properly implemented because the ministers are forward-thinking, strategic, and understand the global picture and understand why we need to come together. So more than just leaving it to government, I'm also imploring private sector to weigh in, come in, because until private sector comes in and highlights the challenges as private sector to government, government will set the policies but not understand the challenges that will ensure that this trade happens. But the more private sector comes in and the more we continue to collaborate and communicate with government, it means that the policies can be tweaked to ensure that there's actual mutually beneficial trade and investment that is happening. Culture can be exchanged. Trust, more than even goods, can be traded.
All right, and definitely looking at post partnership, and hopefully both countries are able to implement well. What do you think we can use as a metric to measure the benefits both countries are getting from post partnership?
So I didn't hear the question clearly, but let me see if I get it. What metrics are we going to use to measure
the benefits
the impact of the partnership?
Post-partnership, yes.
Okay, so very simply, right, like Minister Duggan said, their imports is mostly from the USA. And there's data to show how much they import, how much they spend on that import, right? There's data to show even the quality of food that they get, even if they don't understand the origins. Now, when this partnership happens, that data can be looked at again. Today, there's less than 1% of trade between Africa and the Caribbean. Just knowing that, when this partnership happens and trade starts to happen, and we shift from 1%, that is already a metric that you can see. The fact that we're talking more and more and more about the Caribbean is already a metric that we can see. And as we go along, there is data that shows what we as Africa do in terms of imports and exports from the global north. There's data for what the Caribbean does for imports and exports from the global north. As these partnerships happen, the data will start to show the benefits. One of the other benefits is that for the longest time, we have been programmed not to trust each other, to feel that we're so far away from each other. And a lot of times when we think about the Caribbean, we think about the Caribbean in a certain way. When the Caribbeans think about us, they think about us in a certain way. And most of it is not positive. But the more we interact, the more we trade, which is why I said that more than trading goods is trading trust. We start to change that narrative. We start to see that we can trust each other. So you're going to see that people are banking more, for example, in the Caribbean. There's more trade or financial transactions between Nigeria and St. Kitts and Nevis. More visits. People are more interested in understanding what St. Kitts and Nevis is about, and vice versa. So I think that the metrics will be really easy to monitor and evaluate.
All right, thank you so much for that.
Just...
But let me try to get the final word now from Honorable Minister Senator Abubakar Kiara. So talk to me about how this collaboration will help address, food security challenges in Nigeria now. We know, consumers have been struggling with high food inflation, for the longest time. We've almost gotten used to, food prices being high, even though we're seeing, prices coming down at this point because of harvest season. So, talk to me about how it will help address the issues here in Nigeria.
Well, let me just add to what Aisha had just mentioned in terms of collaboration. That how do you measure metrics? What metrics do you use to measure collaborative partnerships of this nature? Just imagine, like we had other partnerships last year where the Minister of Agriculture of Saudi Arabia came with his business partners, the private sector of Saudi Arabia. And after the meeting, they went back and gave us a demand of about 1 million tons annually of soybeans, for instance. We got into work as government. We created the policy document. The strategy document and policy document was launched sometime about 6 weeks ago, and it was primarily driven by private sector collaboration with the Federal Ministry of Agriculture and Food Security to come up with a document that will give an easy operative environment for the private sector to thrive. And you also know that we have over 70 million hectares of arable land, of which only half of it is being cultivated right now. So this gives an opportunity to open up those areas that were not available before for additional cultivation. Our soybean capacity production is a little less than 2 million tons, but our demand is almost about 3 million tons locally. And so there's an added demand that is coming from the outside, so which means it gives an incentive for farmers to cultivate. Government in itself cannot cultivate. It gives an environment, it gives opening for the private sector to thrive and cultivate and provide those incentives, take care and advantage of those incentives that is coming from abroad. So let me go to your own question. Yes, we have struggled in terms of food security. Mr. President had identified that long time before, when he declared an emergency on food security, and also when he changed the name of the Federal Ministry of Agriculture and Rural Development to Federal Ministry of Agriculture and Food Security. But you would agree with me, and also Nigerians and viewers would agree with us, that what we have achieved this year, for the first time in the history of this country, during festive seasons, Ramadan, lean seasons, we are currently in the lean season, but prices are still depressed. So prices are down, but the issue here is, let me just go straight into it. We still talk about challenges. I mean, yes, there are challenges, and that's why government is in place to address those challenges. And I think we have done tremendously well. In a matter of less than 2 years, we've been able to achieve food inflation, bringing it down, crashing by 50%, for instance. When last year, this time, food inflation was hovering around almost 40%. Today, it's 21%. So I think you could see the trajectory of what government is doing, of what the policies of President Bola Ahmed Tinubu is doing to dampen food prices. We're not where we are, where we want to be, but at least it's giving us an indication that we're achieving. It will not, things like that will not happen overnight. But when you see a direction, that gives you hope. And that's the renewed hope agenda of Mr. President, that food inflation will be taken care of. And I think policies that were courageously done have been starting to yield results. This is August. Usually, the middle of cultivation, prices are usually high. When harvest comes, prices start rising. But what we are seeing is predominantly, across the country, We see prices still at the lowest that we have seen in a couple of years, and even in real terms. Yes, I know farmers there's the issue of input prices and what have you, but let me say that go around. I traversed, I think, over almost 2,000 kilometers within the last 3 weeks. I've been to Oyo State, I've been to Nasarawa, from Abuja to the shores, to the banks of the River Benue. I've been from Abuja to Kano to Azare, and I have not seen a single empty plot of farmland that is not being cultivated because of hardship. So market issues will play itself out. It's about production, it's about supply and demand, and this is what we're seeing. We're seeing a lot of production. We saw a lot of production in 2024, and we are seeing also a lot of production in 2025.
Thank you so much.
I've said it here in this studio before, the prices will come down, and I'm still giving you that assurance. Prices will continue to go down.
All right, we'll definitely love to see, with the rebased data that prices of food are actually really going down. We're definitely hoping, the data actually agrees at some point. Thank you so much for coming on the show today, Senator Abubakar Kiara, Honorable Minister of Agriculture and Food Security, Nigeria, Honorable Samuel Doggins, Minister of Agriculture, Fisheries, Marine Resources et al., St. Kitts and Nevis, and Aisha Maina, Managing Director, Aquarian Consult Limited. Thank you all for coming on the show today.
Thank you.
Thank you.
All right, shifting focus now to the key drivers shaping Nigeria's markets, from stock investors watching at this point, and to the Naira's performance in the FX market and the broader macroeconomic trajectory at this point. Join us for this. We have Arnold Dublin-Green, Chief Investment Officer at Codrus. Join me right here in the studio. It's good to have you.
Thank you.
Good morning.
Good morning. How are you?
Yeah, I'm fine. At this point, some investors are making money, so that makes me happy.
Of course, I'm sure you're making money too.
Well, well, let's look at some of your recommendations at this point, because it kind of gives a pointer, to some investors that maybe don't know how to do their own research. At this point, I'm trying to look for direction. The latest issue there, see for the banks, Access Core, that's a buy. GTCO hold. Talk to me about what you're seeing with financial services.
Okay, I think that the best way for me is to sort of start from the beginning. Right, and I'll talk through everything as much as I can. So I'm a macro investor. So what that generally means is I will take a look at the world, I'll take a look at Nigeria, a country. I will see where the country was, where the country is, and try to figure out where we think the country is going. And in that sense, when you look at Nigeria, Nigeria is a macro improvement story and a capital flows story. And I'll tell you what that means. That generally means macro is improved. The macroeconomic story is improving. So inflation has gone from high 30s to low 20s, as we've seen. FX liquidity is better, and the Naira is stabilizing. And we are currently still in a high interest rate environment, but we think that we will go into a low interest rate environment. So from that sense, now you have to go down to the stocks to see what is going to be affected by all this, what is going to rise or what is going to decline. So if I look at industrials, for example, let me start with industrials, then I'll go into the banks. So industrial, for example, struggled with the FX liquidity and brewers. FX liquidity, high inflation environment, so spend, and a lot of the input costs from these companies were passed on to consumers. But what you're seeing now is huge. I mean, okay, for example, the Nigeria Industrial Index, I think, is up 52% this year, and even higher over a year. This is because on the capital flow side, you're having foreign portfolio investors coming, but on the macro side, some of these guys are doing something interesting. Some of these guys, like your Guinness, some of the brewers, Nigerian breweries, international breweries, for example, did capital raise rights issue to help deleverage their finance, to reduce the finance cost by deleveraging. So you have, for example, Nigerian breweries Nigerian breweries finance cost went down about 92%. International breweries went from about 21 billion Naira finance cost to about a 1.9 billion finance cost. Guinness as well, Nestle. So you're having these stocks benefits from deleveraging. And then on the bank side, NPR being really high, yields being really high, OMO rates were high, treasury bills were high.
So the banks are making bank.
The banks are making bank. And also, with a lot of these banks, with the forbearance issue that we had, the central bank announced that caused a lot of these bank shares to go down. You have these banks turn around because these banks have come around saying, you know, forbearance issue is no longer an issue, so we can now pay dividends. So you have GTCO was always okay with the forbearance issue, and you saw the rally massive from about 30 naira last year to about 100 naira this year, all-time highs that we've never seen. GTCO is sort of a hold for us right now because we've seen that huge rally. Not saying there's anything wrong with GTCO, but we're saying the rally's been it's been intense. So what you probably have is a rotation out of a GTCO into an underperformer, which one could argue is a Zenith perhaps, and also an Access Bank. So GTCO being a hold for us doesn't mean it's a hold on the fundamental side. It's just a hold because we've had this huge rally, and you're looking at underperformance. You're looking at the spread between GTCO and Zenith, which is widened, and the markets likes to play that spread. So it's almost like a pairs trade of sell GTCO buy Zenith, sell GTCO buy Access, but not from a fundamental perspective, just in a price action perspective. We can go into the telcos that also
the telcos,
benefited.
That's an interesting story.
Yeah.
Especially for Airtel Africa.
Okay.
Definitely, I've seen other investment banks also talk about Airtel being a buy. Right now with a target of maybe about 3 to about 4K.
Okay.
But I've also heard some investors complain about not being able to buy the Airtel Africa stock.
Yeah.
Well, that's a different story.
Yeah.
But how are you seeing the telco?
Yeah, so Airtel is the illiquidity. Illiquidity just means it's hard to get in, and once you're in, it can be quite hard to get out. But telcos in general have benefited from the change in macro that we're talking about, right? So the effects of liquidity issue as you're seeing some of these telcos, especially the likes of MTN, with the devaluation, of the currency, they had a lot of obligations, dollar obligations. So what these guys have gone back is they've gone back to renegotiate their USD obligations into Naira, right? So it's just so they are, I don't want to say no longer get the effect of a weak currency, but they've sort of protected themselves from whatever the Naira dollar does. But regardless, we still see the Naira stabilizing. Remember I talked about Nigeria being a macro story and a capital flow story. So if you look at the capital flows for Nigeria, for the Naira, Q4 2024 to Q1 2025 is about a 10.9% increase in capital flows, about $5.6 billion, and $5.2 billion, which is about 92%, 93% of that is foreign portfolio investors. Right, so you're seeing foreign portfolio investors, and just to give you a bit of a picture, 2022 foreign portfolio investors and 2023 foreign portfolio investors was about $3.5 billion, and in Q1 this year it was $5.2 billion. So you're seeing in one quarter it's gone massively above 2022, 2023. So saying that you're seeing this foreign portfolio investments or foreign portfolio advantage coming to the equity market as well, and we think that will continue to the end of the year.
All right, we'll definitely keep watching, but thank you so much. It was great having this conversation with you because we need direction.
Yes, of course.
Get that cash, into. Thank you so much, Arnold Dolver-Green, Chief Investment Officer, Codrus. Thanks for coming.
Thanks for having me. Thank you.
All right, so let's get to a quick one now. Let's dive into the fascinating shift in the world of finance now. We see for decades now, private equity firms have been the titans of deal making, but now a new force is on the rise, family offices. And these private firms which manage the wealth of ultra-rich, high net worth, families are taking over at this point. Joining us to help us unpack what's really happening there, we have Taka, Senior Investment Professional, TLG Capital. Great to have you in the show.
Hi, Ladi. Good to speak to you again. Hope
Fantastic.
You're doing well.
It's great to have you. So we're seeing this power shift right now. Family offices are increasingly making direct investments and co-investing with other groups. Does this mean they are a threat to traditional private equity firms?
So I think you're speaking to a massive shift in capital, right? Where previously you had institutional investors coming in, you had private equity firms funding businesses, and now you find that not only do companies seek alternative sources of funding, be it through family offices, but also you're seeing institutional investors seeking to and being able to invest in new forms of capital allocation. And this has also been enabled by the regulatory environment. And so I think you see direct investments with sophisticated investors that have a full suite of investment professionals and a team around them. And then you also have co-investments that primarily arise from fund investments, which long-term investors are able to make. And so I think you're seeing two things happening. Number one is more family offices and local investors coming in to provide capital. And number two, you're seeing fund investments being made by institutional investors, which of course is what we've managed to do with our first ever private debt fund, which was fully deployed in Nigeria.
And I know, TLG, you guys have been making some moves, lately, and definitely you play a lot with patient capital. What's happening in that space? What trends are we seeing?
Yeah, so I think, the story of what we've been doing is we've seen this trend happening in the US and Europe, and it's mainly been driven by the regulator going to pension funds and institutional investors. The idea is very much that to develop and to grow companies and to grow infrastructure, you need long-term investments and long-term assets. Now, banks, you were just speaking to Arnold Dublin Green, who's a good friend of ours, banks are mainly funded by short-term deposits, and they cannot write long-term investments. So for the people who are paying into their insurance premiums, or the people who are paying into their retirement pension, et cetera, why should they not be able to enjoy the long-term assets and the long-term yield and the increase in return from these infrastructure, private debt, private equity asset classes? So we're very grateful to the SEC and Abuja for facilitating that. And together with FCMB Capital Markets and FCMB Asset Management, we raised from 16 institutional investors, pension funds, insurance companies, family offices, etc. Our first series is part of a 100 billion naira total program size, which we fully deployed, and we think we announced that last week. We're now back in the market for series 2.
All right, definitely. A lot to watch there, and we'll definitely be watching those, family offices and see the growth trajectory in the second half of 2025. Thank you so much for coming on. Taka is an investor at TLG Capital as a senior investment professional. Thank you so much for coming on today.
Thank you, Daddy. Always grateful. Have a great day.
Fantastic. You too. All right, so talking about having a great day at this point, I just got a pip into our stock market right here, and we're in the green, though marginal. That might change, at some point, but it's a great way to start your day with profit. Thanks for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.